Trading Justice podcast. This is Mark Justice, joined with my brother Matt. Two Fed geeks. We're going to talk some Jackson Hole. My brother Matt is a Fed expert. He has been studying the Fed for well over, I don't know, 15, 20 years. Really curious about his insight on the real takeaway from Jackson Hole this last Friday. Markets were partying. Was it justified? And then we're going to look at some really nice, attractive setups on oh my goodness, we were doing the traders lounge today, and just about every area of the market had some semblance of something that I was like, that looks nice, that looks nice. What is the conditions that make those charts look so nice? What is the multiple time frame breakout? We're going to talk about that. We're going to fire out some stocks to Matt. I was talking about the traders lounge just a second ago, but we are part of this amazing pro community at Tackle Trading. It is absolutely just an honor and a pleasure to be part of. We give away a 15-day free trial. I talk it up, Matt talks it up. We talk about how amazing it is. We want you to give it a try. Go to tackletrading.com, sign up for that 15-day free trial. And Matt, I'm ready to dive into the Fed. How are you doing, brother?
Doing fantastic. Excited to be here for another edition of the Trading Justice podcast. And yeah, Linda, bummed I missed the dogs. Well, you can catch the dogs on that recording, no doubt about that. But love being live in YouTube and excited to talk shop about all things Jackson Hole, the multiple time frame situation of the S&P 500. And then obviously we're going to do a little bit of a couple segments on Coach's Corner. Got some questions from the community, as well as kind of talk a little bit about stock it or drop it in this podcast as well. So a fun show, and let's get at it.
Yeah, Matt, listen, Jackson Hole is a big event. We talked a little bit about Jackson Hole last week. Uh, it's one of those things where big announcements can be made, short-term announcements, long-term announcements. We had a little bit of everything. But I want to get your general take, right? Like after Jackson Hole, I was reading analysts from Bank of America, Goldman Sachs, and they came across like being like this was super dovish and just had this like very kind of caught up in the price action dictating the narrative. Marcus Rowling, Powell must have been super dovish. What was your general take on Dove's general message?
I would obviously agree that there was a dovish lean coming out of the Jackson Hole Symposium, and specifically after Jay Powell's speech on Friday morning. And I mean, you don't need to take my word for it. I don't think I think everybody in the market kind of felt the exact same way. They heard what they wanted to hear on Friday, and what they wanted to hear on Friday was, are we going to get a cut in September? And Powell leaned on the fact that, and we'll talk about all the differences and how we got there, but I think initially you obviously saw Powell as slightly dovish, or a dovish lean, maybe slightly dovish, maybe more dovish. I mean, that's debatable, but the market took it as full green lights here on the rate cut side of the equation. They might as well have priced in 4 rate cuts on that price move on Friday alone. Russell 2000 up 4%, S&P up close to 2%, Nasdaq up slightly less than 2%. Ethereum was up 15%, for example, on Friday. ARK was up 4%, aggressive, non-aggressive, defense, stable. So the market didn't really hesitate. They tried to price in the rate cutting cycle, all in about one move. And what was really interesting is that initial move you saw in the market. And I think you can kind of debate the technical side of the equation the last ever since that initial move in the market, but we really haven't seen follow through since that initial drive up in the market. You had the initial move up in the market, and then you stabilize for the rest of the session. And even though we saw some downward drift here today, I still thought that was more, I mean, we're talking about a high inside bar here. That's more of a defensive nature against price action than an aggressive bearish type situation. And so you really haven't seen any follow through. That's going to be an interesting technical discussion moving into the future. But yeah, I think the market rightly heard what they wanted to hear, and what they wanted to hear was there was a live rate cut in September. I'm not sure the market heard anything else. I'm not sure the market cared about anything else. I'm not sure the 98% of the market actually watched and listened and gave it some thought on what occurred at Jackson Hole. I think they saw the market's response, and everybody just cookie cutter accepted that this was in a very aggressive dovish lean. And I think the price action kind of clouded the judgment on how they saw the symposium, because yeah, although I saw it as a dovish lean, I didn't take Jay Powell as dovish. I thought it was very, very balanced against the economic conversation of slowing growth in the economy. He talked about the economic contraction that we've seen from this year to last year. He talked about job growth has basically been flatlining all year long. We're averaging close to 36,000 new jobs a month. That's paltry compared to what we usually get. And so he talked about his concern on the economy and really kind of focused on the labor side of that equation. And on the flip side, he had a lot of concern, in my estimation, on labor. And I thought, on the balancing of the risk, I didn't think he was declaring victory on inflation. He was talking about concern of inflation. He
Yeah,
was talking about concern of core inflation. He was talking about how tariffs have impacted the mandate and how it's made it more complicated. And so, like, I think the market heard what they want. I think the price response kind of clouded that a little bit, but at the end of the day, I got this as a slight lean, not an aggressive lean on the
yeah. I mean,
dub.
I even heard the words pivot thrown out there and such. Some of the hyperbole you hear with
I don't know if
markets.
it's a pivot.
I mean, for me, like when you analyze this, would you consider this a fair statement that Powell basically confirmed what the market was already pricing in? That you're basically going to get your cut in September, and you're going to get another cut. It's probably time to confirm those cuts because of the labor, concerns. Was it just a confirmation of what was already priced in, rather than? And I think you used a very important phrase. It is not the start of a cutting cycle, right? Like, would you say that's a fair statement?
Well, if it was a legitimate pivot, then I would embrace the cutting cycle conversation a little bit more. A cutting cycle means that the Fed is entering into a continual cutting cycle that will continue following this event, the next event. They're not looking to cut once, twice, thrice. They're looking to cut over time. And although that might be the end result here, I don't think that's the expectation at the Fed. That might be where we end up, depending on what happens on the labor side of the equation. But as of right now, I don't think that's what the Fed is thinking. I don't think anybody at the Fed is thinking that. I don't think Jay Powell's thinking that. I don't think the Hawks are thinking that. I don't think the Doves are thinking that. I think they're honestly just thinking about, and I've talked about this for the last little bit of tackle, but I think what they're really just talking about is not a cutting cycle, but I've written about this in the newsletter as well, alleviating the restrictive territory. What they did, the pivot in policy occurred with the balancing of labor versus inflation. Would you agree?
Yes, of course.
Okay. It's not that Powell favors one or the other, right? It's just that the change in language brought labor into the same pot of concern that inflation is. Would you agree with that?
Yep.
Okay, so if that's the case, there's some balance there. There's some concern there. It's not that, and which means he's net neutral, which means if the interest rate is 4.25 and he's balancing labor and inflation, well, that gives him the argument to alleviate the restrictive territory. And that's what I wrote about over a month ago at Tackle Trading, was my base case on what was the expectation of the path of policy was to alleviate the restrictive territory of the interest rate, which is about 100 basis points. It's between 75 and 100 basis points is what it is. And so you go 4.25 and say you get a cut in September, say you get a cut in December. Well, all of a sudden you're down to underneath 4 and you're really close to the net neutrality. And so I think he's trying to get into some balance here with monetary policy. I do not believe they're embracing a cutting cycle. And the reason I don't believe that is because I don't believe that's in the data right now. There's concern on labor. We're not seeing labor implode. there's concern on labor. We're not seeing massive layoffs. There's concern on labor. Hiring's not happening at the rate we want to, but layoffs aren't happening at the rate that you see when there's a massive concern. So I think more than anything, it's about alleviating the restrictive territory and creating some balance. And as you do that from a policy perspective, you go down to a net neutral policy, which is, in my estimation, between 3 and 3.5. And so you got 75 to 100 basis points where I think the Fed can play with to getting into neutrality. But at this point, there's no data out there that suggests the Fed can embrace a cutting cycle in the face of inflation. That would be, I mean, I think it's pretty aggressive to even alleviate the restrictive territory, let alone try to force growth against this conversation. You're just going to repeat the same mistake you made in 2020, which they're trying to wipe out here. So, no, I think the difference between me and the market right now, and me and a lot of other people that kind of watch the Fed, is I believe we're simply talking about the alleviation of restrictive territory and the interest rate. I do not believe we're starting a cutting cycle as of yet.
Yeah, so Powell throws the bulls and the doves a bone, but this isn't the great narrative like January 2019 or
I'm
October
not even sure you want
2023.
to see an aggressive cutting cycle here.
You
I'm
know,
sure that would tell the market what you think it tells.
yeah,
An
when
aggressive cutting cycle is only in the face of very negative economic warnings.
I have a few
So,
bond vigilante theories that would suggest that you don't want to see that either, but we'll save those for if it actually occurs. Listen,
yeah.
it wasn't the only big, and we can talk about a lot of other things from Jackson Hole, but I do want to touch on one other thing. But you and I were joking about this last week about the Fed's big disaster they had. Well, lo and behold, Matt, they decided to do a little cleanup. What was the garbage spill that they were cleaning up at Jackson Hole, amongst other things?
Well, only geeks like us and the people listening to the pod will understand this one, but it's a very important policy change that didn't get enough conversation in 2020 because, let's face it, in 2020 we were going through a pandemic, a once in a century pandemic. We were going through what I would describe as a once in a century election too. It was hot and heavy everywhere, and so the Fed kind of got a little bit of a pass on some of
Mm.
this in 2020. I don't think they should have. Like I was screaming to the hills about how big of a mistake this was. In 2020, okay, what happened was the Fed was faced with a scenario where labor and inflation was a concern. But based on their mandate, they could not lower interest rates because of the concern on inflation. Inflation was averaging over 2%. And when inflation does that, it's really, really, really hard to embrace a cutting cycle to a certain extent. And so what the Fed did is they changed the 2% target. The 2% target at the central bank the policy is called flexible inflation targeting. Flexible is a terrible name because it's 2%. You can't average over 2%. So what they did was they said for the previous decade, we have averaged under 2% inflation. Now, I'll argue that that wasn't real inflation, but from a CPI report perspective, they averaged 1.5%. And so they said, okay, for 10 years, we've dealt with 1.5% inflation, which means we got a lot of inflation we can play with, meaning we got a lot because we've been so good in the past. Again, this is how the Fed thinks. It's ridiculous, but because we've been so good in the past and we've only laid on top of the consumer 1.5% inflation, we can go up to 3% inflation over the next 5 years, and we can average above 3% because the consumer can take it. We've done them really good for the last 10 years. And so, yeah, let's do them a little bit dirty for the next 5 type thing. And so they made a decision to modify the inflationary target. And they called this the flexible average inflation targeting. And so they would target above 2%. They would allow inflation to run above 2%. And this was the change in policy that laid out the groundwork for the transitory conversation. We see this inflation as transitory. No, it isn't. They knew it wasn't. And this is the thing that has to be said. They knew in the moment it wasn't transitory because they adjusted the policy to allow for this inflation. They literally knew that this inflation was coming in. They saw this inflation coming in. They knew it was going to be damaging. They knew it was going to be destructive. And yet they tried to gaslight everybody and be like, oh, no, 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 no. It's just transitory. It's just transitory. It's just transitory. But on the other side of the ledger, 3 months before that debate, guess what? They changed the policy to allow inflation to average above 2%. So while everybody and their dog over the next 2 years is having a political conversation about inflation, I'm having what about the central bank, guys? It's the central bank that allowed this situation to occur in the first place. And so what Jay Powell did on Friday was he basically said, you know what? My bad. My bad, everybody. Sorry for that inflation we put on you. Sorry for allowing inflation to go above 2%. Sorry to allow 10% inflation in 2022. That's our bad. We apologize, mea culpa, and we're just not going to do that again, okay? So we're not going to do that again. But while I say this, we're also going to embrace a rate cut. It's just it's hilarious, honestly. It's hilarious. So he's trying to give a mea culpa of inflation in the past simultaneously while he's laying the groundwork for another cut on the interest rate. It's hilarious. Oh man, I need South Park to get on top of the Fed. I need a South Park episode on the central bank and kind of all of their policy situations. But yeah, that's what the inflation targeting was, and it didn't get a lot of love out of the Jackson Hole. But I honestly think this is one of the major policy situations that has an impact downstream. It's these types of conversations that I geek out on. It's, ooh, are we going to get a rate cut in September? What everybody else geeks out on. No, these are the big deal policies.
It is a whiff of responsibility that they're attempting to insert into
Jay Powell knows he's gone next year, and he didn't want this on his gravestone.
That's what
Guess what, Jay Powell? It's on your gravestone. There's nothing you can do about it.
The timing of it is, Jay Powell's going through his checklist, cleaning out his desk, and it's like, we got to take care of that.
We forgot about that average inflationary targeting policy. Yeah, we got to get rid of that one. So they went back to the FIT policy, which in my estimation means absolutely nothing to the future. Like inflation is going to average over 2% for the next few years, in my estimation.
Yeah, no, and I thought the market telegraphed what it wanted to do here, very nicely. Like, we had the CPI report. What was it? 2 Tuesdays ago, where
2.7 year over year.
Yeah, where you had a nice CPI number, and you saw certain areas of the market be like, all right, let's go. And then we had that hot PPI number, casting some doubt, on whether they were going to get their rate cuts this year. And then Powell comes in, says, nope.
Polar opposites of two reports back to back on the CPI and PPI.
And so I thought the market telegraphed, and so small caps leading on Friday wasn't surprising to, I think, anyone paying attention, right? And so I thought the market telegraphed what it wanted to do. It wanted to break out, and I thought technically, and you wrote about this in the newsletter, it set up this move really nice, really clean. And I know, man, I was on the lounge today, and Frank and I were with our pro members looking at a lot of different charts, and we saw a lot of pretty charts out there.
There's for everybody. There's charts for everybody. Legitimately, you love a reversal with deep technical value. There's charts out there.
And one of the reasons is that this just isn't a 7-stock conversation. This just isn't a narrow breadth conversation.
That's the beautiful thing when breadth expands.
And it's expanding on this multiple time frame breakout, which is for a trader. Some magical words. Multiple time frame breakouts are one of the most popular patterns because they don't usually just provide a trade map. They usually provide like a dozen, right, or two, or three. Like,
you never know. Technically, everything's based on the law of probability, but at the end of the day, a multiple time frame breakout has a high edge to create a trending environment.
And I want you to teach us about this. I know that's what we want to do, but this is what I love. Let's say the breakout fills. Right? It cost me a trade or two. I adjust.
What if the breakout succeeds?
Then I probably have about 40 or 50 trades that work out.
Yeah.
Right. And so that's why they're so exciting to me, right? And I don't have to do those 40
Well,
to 50 trades
and
on
it's
day one.
also why it's taken 9 months for it to do it.
Yeah. So break
You know
this
what I
down
mean?
for us because I think it's a
Well,
good teaching
first and
moment.
foremost, one of the things that I wrote about in the Tackle Trading newsletter over the last couple weeks, and if you're not a pro member, like there's a lot that we do in our pro membership, from the Traders Lounge to the coaches shows to the masterminds and the cash flow club and everything we do in our pro membership. But that newsletter and that traders report, the weekend homework for our community, and man, that newsletter last 2 weeks has been spot on, just absolutely laser dialed in, spot on. If you read the technical update in the newsletter, you knew exactly what the market was going to do before the market did it. And so I wrote about this in the last couple weeks, both, and there were two primary points that I wanted to get across in terms of the support levels and the trend lines, but also a lot of times we get so fixated on the ES or the NQ, the S&P 500 or the Nasdaq, because that's where all the sexy trades are. You know what
Yeah.
I mean? That's where all the sexy trades are. That's where all the 10x trades are. That's where the home runs and like the old baseball model in the 90s. Chicks love the long ball, right? That's where those home runs are in the market, is in those aggressive asset classes. Well, a lot of those sexy trades and those aggressive asset classes, there's what is it, 20% of the market? Well, what about the rest of the market, the other 80% of the market? Well, they really haven't been part of the conversation. And so what we've been talking about at Tackle over the last, 2, 3 weeks, but really dialing in this potential breakout for a while now, is the other indexes. And I thought that's what one of the major themes of the week, this week coming in, was not necessarily what's happening with the S&P 500, not necessarily what's happening with the Nasdaq, but look at the Dow Jones breaking out of a weekly chart that is about as clean can get. I mean, you see that Dow Jones just breaking that 45,000. It'd be 45 on or 450 on the diamonds there. If you go to the ETF, you can see the same thing here. You look at that multiple time frame. What a multiple time frame breakout mark, it's when the daily chart and another time frame that is closely related to the daily chart, such
Hence
as the
multi, meaning
chart.
two or more.
Yes, and monthly charts, quarterly chart, it doesn't have to be two, it can be three, four, five, right? But when multiple time frames are aligned with simultaneous traders that are looking at day trades, swing trades, position trades, investors, all these different time frames of traders are looking simultaneously at this level. And when that level gets breached, it usually starts a trend. And that is the ultimate birth of a trend. And when you're at the very beginning of a trend, i.e., a breakout out of neutrality from a multiple time frame conversation, the most likely scenario is you're going to get a trending environment here, not just a breakout with momentum, but a series of higher highs and higher lows. And so when you look at the Dow Jones, for example, nice little breakout on the multiple time frame situation. When you look at the RSP, which is the equal weighted index, well, what do we got? Daily chart, high base, daily chart, a little bit of a cup and handle here at this point, was a head and shoulders, more of a cup and handle now. Now you're breaking out of that daily chart. Well, that's a breakout. Swing traders are going to want to look at, stock in that environment. And by the way, we're not going to get shy about a snapback inside flag. I can tell you that. But especially if it pivots tomorrow, like that would be really, really, really good. If we get a doji tomorrow, oh, please give me a doji tomorrow. Just one doji. Anybody, just one doji. Just give me one doji. But if you look at it through that totality of the lens, you look at the RSP, you look at the SPY, which is the equal weight, which is the non-equal weighted index. Well, you're not breaking out here. And so what you're seeing is breadth expand, opportunities expand outside of just the relatively the sexy trades, right? Nvidia's a sexy trade.
Palantir is a sexy trade.
Palantir's about as sexy as it gets, both on the top side, downside right now. You know what's not sexy? Your food-based company. You know it's not sexy?
Everything I did a trade on
You know
today
it's
would
not
fall under
sexy?
the
90%
non-sexy
of what Mark
category.
does. And so, it's as breadth expands, that's why this multiple time frame breakout has been so important. Now, definitional, Mark, when we talk about multiple time frames, it's when time frames that different traders are looking at are all aligning. That's multiple time frame. And so when you get daily, weekly, when you get the 15-minute and the hourly chart, when you get the weekly chart and the monthly chart, multiple time frames, different traders all simultaneously looking at the same level. But this is not an abnormal conversation for traders. Any legitimate trader will never just anchor on one time frame. You need to have the context for that time frame. I talk about this in short-term trading all the time. Whether you're swing trading or day trading, it's not a substantial difference in mentality and technique. When you're swing trading, you're looking at the daily chart for trend development, pattern development, support and resistance. When you want to go out to the weekly chart to ensure you're not running into any major overhead resistance or support underneath. And then on the 1 hour time frame or the 4 hour time frame, depending on your favorite time frame of choice for a swing trader, you're going to look at, okay, where am I going to put my entry? Where am I going to put my stop loss? It's the execution time frames. So, Mark, in multiple time frame analysis, you have these three time frames. You got the big picture, right? For a swing trader, that's a weekly chart. For a day trader, that might be an hourly or a 4 hour chart. You got the big time frame, the primary time frame, where you're just looking at major levels, major zones, major levels. Then you got your execution time frame, where you're doing a lot of your and not your execution time frame, but your trending and your pattern. And, as a day trader, that for me is going to be that 1 hour trend. I love the 1 hour trend on an intraday time frame. As a swing trader, that would be a daily time frame. And then you have your shorter time frame, which is your execution time frame. And what your execution time frame is the time frame you live on. You're living on that chart because you're trading it. You're putting your orders there. You're adjusting your stop loss there. And so a lot of times, Mark, people get so fixated on their execution time frame that they lose the forest through the trees on everything else. And so we talk at Tackle Trading and we anchor against multiple time frames because they're, quite frankly, the most powerful trading environment you will ever have. And if you need to learn more about multiple time frames, oh man, do we have classes and education at Tackle Trading for you, including the best master trader course in the history of mankind. No doubt about that. And so multiple time frames is always going to be an extremely important conversation for us at Tackle Trading. And when you come back into the market and you say, okay, well, Matt, what is a multiple time frame? Well, you don't got to go too far. Go look at RSP. Go look at the Dow Jones. They're doing it right this very second. Russell 2000 breaking out on the daily chart. You come out to the weekly chart. Guess what? That level was not just a daily level. You go back all the way to last July, a year ago, Mark. A year ago, this was a major pivot. A major pivot at 2,300 was a year ago. Not a minor, not an intermediate, a major pivot on the weekly chart. That got dialed in a cup and handle pattern before a momentum trigger on that breakout last November. Then it got tested on a snapback on coming into the first of the year. Then it got drilled for 4 or 5 consecutive weeks. That's multiple time frame because traders aren't looking at the weekly chart. They're looking at the daily chart. They're looking at the intraday chart. That's a resistance level on multiple time frames. And so when that gets broken, what if you were anchoring to everything bearish underneath 2,300, you're now anchoring to everything on the development side is bullish above 2,300, and you should be ready for any flag-based pattern or whatnot that gets dialed in here. And so, yeah, I just feel like the MTF conversation, i.e., multiple time frame conversation, is one of the most overlooked and powerful technical concepts in the marketplace. It's simply when two time frames are aligned from two different types of traders simultaneously getting the exact same execution philosophy. And that's what we got on RSP last week. That's what we got on the Dow Jones last week. That's what we got on the Russell 2000 last week. And the ultimate question is this just a singular move, or are we seeing the beginning of something new? And to me, the beginning of something new does not happen when you break out of resistance, but it's the first increase in support after the breakout. And so do I think the Bulls have the edge here? Absolutely. I think the Bulls have
Oh
the
yeah, there's not even a
edge.
crabby,
I like absolutely.
I want to be bear like myself. Like this is not one you fight. If it happens to collapse, good for it. But this is one you want to play.
No, no, no. If it happens, claps good. No, not good for it. No, absolutely not. Have that conversation somewhere else. Knock on a little bit of wood here. But no, you don't want to have it collapse after a breakout. That creates the nastiest technical conditions in the history of mankind. You don't want what you would just ask for. You need to knock on wood.
No, I don't think you heard me right. Like because like if this
If
holds,
a breakout collapses into a fake out, it creates chaos. Nobody likes
yes, no,
Bears don't like that. Bulls don't like that.
you don't like this
Don't
is
like that.
one of those. I
Nobody
think I
likes
said
that.
it in my training lab this weekend. In my notes, I was like, listen, you just room for this one to work out because it's going to be real easy to trade if it does.
I just yeah, I certainly think tech can take a little bit of a simmer for the next few days.
That is a whole different question, and
Uh,
maybe we'll talk about that here in a second.
Nvidia is
Stock it or
gonna
drop it.
Nvidia is gonna be a catalyst here. And so whatever you say about the tech space,
Yeah, no, and I
you're
just want to
gambling in front
emphasize
of you're
again
gambling with that in front of Nvidia.
my favorite thing, and then we're going to get into stock it or drop it. My favorite thing about a multiple time frame breakout, I tend to be very conservative. I don't like to lose. Is that I throw those first few trades on, they work out, and then I can just keep on going and going and going. It feels like I'm playing with house money on a multi-time frame breakout. And then months later, you get too extended, and then I get crap. That's how that story usually plays out. Usually plays out. You ready for stock it or drop it, bro?
Of course.
Biggest catalyst of the week, Nvidia. Let's start there. Nvidia earnings Wednesday night. Small caps, RSP, the Dow, industrial stocks. There's so many good areas of the market. I have a feeling tech might be impacted by a certain company on Wednesday night. Nvidia hasn't let us down very often in earnings. Stock and profit. Talk about Nvidia ahead of earnings.
They certainly can a little bit more in the last year than they have in the last 3 years, but I do maintain your point. It's Nvidia, king, queen, and country of AI. Even on a gap down, I think you got to be looking at 150. Like, I don't think that's the nastiest situation in the world. I think anybody
And you
who
were
knows
looking at that
about
expected move. What was the expected move here?
the implied expected move is about 7.5%. It's a big one. Like these, anytime you get north of 5, like that's a little bit more volatility is expected. I got this as a relatively high bar going into Nvidia's earnings.
Okay.
Expectations are high here, both from a fundamental perspective. The growth rates they're expecting are outlandish in comparison to any company you can name in the S&P 500. That's not abnormal for Nvidia, but it's not just that. Bar's high because if you think about last quarter, we were coming from a recovery situation. And in that recovery situation, it's a little bit easier to drive price action. You're not in a recovery situation when you are at firmly entrenched at the all-time high price in a momentum trend that Nvidia has had over the course of the last 3 to 4 months. And so from quarter to quarter, Nvidia's had a rock star quarter. They had a rock star earnings report last quarter. It was an amazing report, broke out. We talked about the breakout extensively. It's a little bit of a different story here. You're extended going into it on the weekly chart. You got a high bar situation. And don't get me wrong, if this was any company in the market, I would say 90% gap down scenario here based on the totality of the high bar. And it has nothing to do with Nvidia. Like
And
nothing,
nothing to do with the
nothing.
numbers, just
Like
high
I
bar.
love this company. This is an analytical, technical conversation as much as anything, but there is a relatively hard bar here, but I don't care. I really don't. If you gap up above 185, I'm going to be talking about secondary pattern development. And if you gap down under the 90 MA, I'm going to be talking about a correction. And in either one of those, I'm going to be talking about bullish stuff. So like to me, it's a stock, it's Nvidia. And I would not hate a gap down situation. I would not hate a correction. I don't think we should fear a correction. Are you kidding me? This correction was extremely healthy to Nvidia. This correction post earnings, fairly healthy. This correction, look at the power move after. And so if we get a correction down to the breakout channel at 150 or 155, it wouldn't be an earnings day, but it would be following that. Like, I don't think we're going to hate that after we get a reversal. So, no, it's a stock, and for me, it's Nvidia, king, queen, and country of AI. It's AI. It's 1A, 1B, 1C on the tier A on the AI Gold Rush watch list. There's not a chance in the world I would say anything other than stock it, and let's get prepared for either a breakout analysis on earnings, or whether or not we get a gap down and we talk about a correction.
Well, Jay Powell wanted to clean up his pandemic bad policy. I think the next company wants to go back to the price levels from the pandemic. Zoom Communications, ZM, had earnings this week. Uh, and I'll be honest, one of my favorite patterns in the market, like from a reversal low bottom.
Yeah.
Here's see your take. Zoom Communications, stock it or drop it.
Yeah, it's been reversing for the last few years. It's given you a couple of those opportunities, I would say. I would also say anytime I've ever brought up a reversal situation with Coach Frank, he gently reminds me that I don't have a great track record on reversals on Zoom. Thank you, Frank, for that constant reminder. It has saved me a lot of time and headache. I would say drop it. I'm gonna say drop it. Like,
Okay.
I totally get what you're saying and what you're seeing here. You got a good reversal, but you got an EPS argument for the last 2 years that goes from 142 to 153. Good luck with that growth.
If you're saying it's a staple company hiding in the tech sector.
I'm saying it acts like a stable company that doesn't pay you a dividend.
Okay, fair enough. That's a reasonable argument, actually. That's a
Yeah.
reasonable argument. Well, let's talk about an actual staple company, Walmart. Rare
I understand
miss.
your technical argument on Zoom, though.
Rare miss on the actual earnings. Walmart usually beats a little bit of sell-off, stock or drop off. Walmart.
Let's see that reversal at the 200-day moving average and stock it.
Yeah, it's pretty simple, isn't it?
But this is what I'm talking about with Nvidia too. Like, let's say Nvidia, you want to talk about high bars? Walmart ran in front of their earnings. A consumer staples company ran in front of your earnings. What do you think a consumer staples company going to do? Run on top of that? Are we serious? No, high bar expectation. It wasn't just that they failed to meet the high bar expectation mark. They missed on EPS. This quarter was not a good quarter to miss on EPS. She missed on EPS. 81% of companies beat on the EPS side of the equation. They lowered guidance slightly. They showed concern of tariffs, and they talked about inflation-induced tariffs. It was not a good moment for Walmart. Let's just put it into the moment box, because anytime Walmart wants to get around the 200-day moving average, I think we pay some attention.
Yeah, no, that
Don't
would
get
be
a lot. You don't get a lot of moments at Walmart on the 200-day moving average. So, like, great blue chip companies don't get to the 200-day moving average without some concern, which means those buying opportunities don't happen without a little bit of blood in the streets. And what does Warren Buffett say about blood in the streets on great blue chip companies? Well, when there's blood in the streets, buy.
Palo Alto, Pan W, cybersecurity leader. I don't think I've ever brought this one up on Stock or Drop It with you. Old Pan W. I thought it was a messy technical situation that was kind of wanted to see where your head's at on the cybersecurity leader.
My head's not really a lot of places right now in cybersecurity. I don't have a strong opinion of Palo Alto right now. I will say, from a technical perspective, concern everywhere. This is a bearish retracement against the backdrop of a gap in a momentum situation, coming back to test the 90 EMA. Anything underneath 180 would see a trigger down to the mid 160s. Anything above the 50-period moving average at 190 probably get you 200. It's if anything, it's a bi-directional strangle, out of the money strangle, but you're not going to get any volatility build because you're post vol earnings. So it's a drop it for me.
Two more for you. Home builders rallied after, whenever you get Fed sniffing, get cut. So give me pick you chose Toll Brothers, the thing. But I did want to do pick on home builders.
Um, I could care less about Toll Brothers. You can talk to me about Toll Brothers. That's fine. I don't have a take on their earnings. They all were very, very similar. I'll just say this: if it's good enough for Buffett, it's always good enough for me.
I,
And Warren Buffett bought himself some home builders the other day.
And you stole my little tidbit.
So, well, like I don't have an opinion on that. Warren Buffett's smarter than I am. So when he talks, we should all listen. And he talked, and we should listen.
Yeah, it's that just that simple. And then I just wanted to bring up AEM, gold mining stock. I could throw a lot of ones on here. You brought up a really nice one on Trade Masters last week.
Oh,
Really nice.
you guys should attend Trade Masters. I've been on fire.
Matt has nailed a couple over the last couple of
Two
weeks.
weeks in a row, guys. Hit some home runs. Come hit them
Like
with.
Wednesday trade, explode on Thursday, price action, absolutely worth it.
Yeah, you want to watch on Wednesday because I look for confirmation on Thursday. Let's go.
AEM, gold mining stock with a setup, stock it or drop it.
It's a gold stock. Stock it.
Yeah, no, and seriously, Matt like nailed, like just outright nailed picks the last 2 weeks. Wednesday at this time gave the pick. Thursday, the next day, there was a big green candle.
Two in a row. Two in a row.
Show up Wednesday. Show up Wednesday.
By the way, neither one of those two home runs were the sexy tech names.
No, like listen, and that's the thing. If you cannot open your mind,
and miners.
I have a feeling in the coming months the market's going to provide some nice opportunity. They're not going to be the sexiest names. I almost brought up Conagra Brands as a stock it or drop it for you. Old cat.
You might have got me on that reversal, Zoom reversal. I am a sucker for a cheap food-based company that has a reversal. I am not a sucker for a 3-year reversal on Zoom.
All right, I got a couple questions for you on Coach's Corner, our final segment as we wrap up a podcast. I got a couple versions of the same question. I'll do my favorite version of it.
Okay.
What's up with Bitcoin, bro?
A well is selling and they haven't stopped selling on the intraday side.
Like some interesting weakness, right? Like market's feeling froggy and
especially late in the session today, Mark.
Yeah,
like CNBC. Can I just give a PSA to CNBC, like a little public service announcement here? When you're reporting on how well an asset class is done that day, whether it's up or down, and you only include from the futures open till the current price, and you don't show what happened on the weekend on these 24-hour instruments, you're lying. We all see it. We all know what you're doing, and stop it immediately. They tried to come out today and CNBC's like, oh, Bitcoin's dojian. Oh,
no, that is not the story of Bitcoin.
It's like, what are you talking about? It gave up everything on Friday and then some, and then some. And if you don't hold at 10, you're going to 5, and that ain't a good look. So what's going on here? I don't know, Mark. All I know is it hasn't had a technical read that I've loved in a long time now.
And it had 2 shots 2 weeks ago on the breakout, and then on Friday failed both miserably. Not just failed, just immediately gave up gains. It's not a good look. You could point to seasonality. This is not a strong seasonality. You could point to Wells dumping. You could talk about risk. I don't know exactly. I know it's not look good looking. It's the one thing that keeps me crabby in the market right now. And a lot of good charts, Bitcoin, and maybe it just is a point thing, and maybe it doesn't trickle over to tech. We'll find out. But it is not a good look on Bitcoin. I know that.
It's a horrific technical look. Like it's really bad, and it's been really bad ever since the let's say it again, another failed fake out another failed breakout on Bitcoin. You look at it on the weekly chart, high base fake out that goes into a pullback. You better start holding some things, Bitcoin.
Yeah, this is honestly the worst look on Bitcoin I can remember in a long time. It's not worst sell-offs. I mean,
it's the worst one until this one when it gapped under the 50-period moving average and recovered. That was pretty nasty.
And you had to deal with that for 0.4 of a second. Right.
It was like 3 weeks, but I do get your point. Well, while we can complain of Bitcoin, though, can we also equally give Ethereum a little bit of love? I know it's shifting volatility absolutely everywhere here, and that has to be a concern in the crypto space right now. But At least Ethereum had a 14% move on Friday, that when it got beat up today with the Bitcoin, it didn't break any pattern, which means we gave up a little bit of what we gained on Friday. Ethereum still in a bullish uptrend, but I can't not see this shifting volatility. Like,
Crypto space is a
I
little bit wild right now.
really don't like shifting volatility.
Pay attention to your ARK stocks here.
It's one of the things that absolutely I struggle with at top end of trends. When you start to see volatility battles up and down, fighting for the hearts and the minds and the souls of the traders and the investors everywhere. Like, yeah, at a low point, let's have those battles. At the top point, where's the buyers going
Yeah,
to
like seriously, like if crypto volatility is not going to bleed over into industrial stocks and this and that, you can't watch those ARC support levels, right? Because our, just if we see support levels continue to break on crypto.
I saw some stats on Twitter today. Now, most things I see on X are nonsense, but there's always some gems out there, right? There's always some gems on X. And I saw some stats post-Fed that Bitcoin, and tell me if this makes sense to you. Post-Fed Bitcoin analysis is short-term down, and then it bottoms, and then after the Jackson Hole bottom, it's got multi-months of trending analysis back to the top side.
Yeah, that bottom could last 3 to 6 weeks though in a seasonal week period, right? Like I don't disagree with the general path they're laying out, right? I mean that's just a seasonal path they're throwing out there,
Yeah.
right?
Yeah.
Right. I think the fundamental drivers of crypto are amazing. Like,
Yeah.
it's just a terrible.
Yeah, I think we can both agree that right now it's a stay away.
Yeah, no, like even for a credit trader, and Bitcoin's my favorite asset class long term. And I'm like, oh, that's just too bad of a look. I can't even sell credit on that right now.
Listen, like I'll have interest when it slows down. The opposite of shifting volatility is lowering volatility, and when it gets more consistent. So when it gets more consistent, yeah, we'll come back in. But until then, I think
So
specifically
yeah,
stay away
so I
until
appreciate the sup with Bitcoin, bro. Next one, a little more elegant.
those are selling. I don't know.
A little more elegantly phrased. How much time does it take to learn to trade? If I had an hour a day, is that enough time?
Is the question how long does it take to learn how to trade?
That is the general sentiment of the question. How much time does it take to learn?
Oh,
If
and
I
they
had an
said if I
hour a
had an
day,
hour a day.
is that enough time? So it's like same question, two different questions.
So in general, is it if I apply an hour a day to my trading, can I learn how to be a trader?
Yes.
Not only can you learn how to be a trader, you're going to be an amazing, great top 5%er in the market. I wish everybody had an hour a day to apply it. By the way, everybody does have an hour a day. Everybody has 2 hours a day. Everybody doesn't like they say they have hours in the day because they look on Twitter and Facebook and Instagram and scroll and mind warp out of humanity so that they can live a little bit of different life on the social side of the equation. Let me see your Netflix queue. Let me see all of those things and tell me you don't have an hour a day. But if this individual says I have an hour a day to apply to my education, not my trading, but my education, you do that for a year straight, I don't think you'll ever worry about money again.
I like that. Let's cut. I have one more question. I don't want to have that other question just because that was such a good way to that was a mic drop.
I wasn't intending to get to me, Mike. That was just how
It
I
was
am.
a mic drop. Oh, I am going to give this one because I told it. The person said, "Should I copy other traders' strategies or create my own?" I thought that was an interesting question.
Until you have the ability to modify rules on your own, learn somebody's system, apply that system until you can learn how to modify that. That goes to the other question. Because in that hour a day in your education, that's part of it. Because the tackle trading, it's not just sitting your butt in the seat and learning techniques. Education plus application. You have to apply it. It's not even if it's done application in a virtual environment, you have to take what you are learning and apply it. And so that hour a day would be both on the education and the application side of the equation. But yeah.
Well, listen, from Powell cleanup to Zoom, drop it to Zup Bitcoin, bro.
I
It's
love
been
fun
a
of this
podcast.
podcast today.
I've enjoyed it. Love your energy, bro. Send us out.
Well, ladies and gentlemen, if you love the podcast, best way to support the podcast for those of you watching on YouTube is give us a nice little like and share. For those listening on any podcasting app out there, we love you guys. Thank you for listening. Thank you for being the best part of the Trading Justice podcast. We decided to start streaming on YouTube again just a couple weeks ago. We're going to continue to do this every single week on YouTube. The podcast usually is going to be around 6 p.m. Eastern Standard Time on Mondays. And Trade Masters, don't sleep on Trade Masters. Live stream Trade Masters on our YouTube channel on Wednesdays at the same time, 6 p.m. Eastern Standard. That's Coach Frank and myself. Podcast, obviously, the Justice Brothers here. Trading Justice kind of gives that name away. But we do those two streams on our YouTube. But at the end of the day, guys, the number one thing, if you want to be a part of this community, and do the things that we see in some of those questions, best way is just to join up as a free trial membership of Tackle Trading. You can head over to the website. You can hit the link in the description below, tackletrading.com. Once again, hit the link in the description below, and you can sign up for a free 15-day trial. And in that 15 days, you're going to get access to 15 different trader lounges, 4 different coaches shows, newsletter traders report, and also sign up for the best class out there, Master Trader. If you are serious about your trading, I'm going to tell you right now, Mark, you can ask anybody at Tackle Trading and they will say the exact same thing. Register and get into Master Trader. There is no better start for a new trader to learn how to trade than to get that technical and options foundation that we do in Master Trader. Mark, I just taught one this past week. It was amazing. I went 3 hours. I went 3 hours and 40 minutes on hardcore technical analysis, candles, trends, patterns, support, resistance, Elliott wave theory, wave counting, Fibonacci. And you know what? I could have went 6. I could have went 7. And I'm sure the team could have as well. It was amazing. We do that every month with our pros, guys. Stop wasting time jumping community to community and come stick with the 5-star community, the best community out there, Tackle Trading. And you could test all of that out free. 15-day trial. See you in the community.
Yeah, absolutely. Have a great week, everyone.
Later, team. Hit that.